Filing a business tax extension can be either the smartest move you make this tax season, or it can create larger problems than anticipated during the year. What's up, guys? Mike back at it from Ledgerly, co-founder, CPA, alongside my partner in crime, Andrew D'Amico, bringing you the latest and greatest when it comes to business taxes, individual taxes, and ultimately creating generational wealth. Make sure you hit that subscribe button to stay tuned for videos just like this one. All right, let's cut right to it. Most business owners think that filing extensions are neutral. It's like hitting pause, but guess what? They're not. Yes, they pause you actually filing the tax return, but it doesn't pause the payments that the IRS and the state need. So they're ultimately a strategic decision with a real upside, but also a potential downside if not done properly. So let's clarify, what does an extension actually do? Well, number one, it gives you more time to actually file the tax return. However, it does not give you more time to pay. And ultimately, it pushes decision-making off to later in the year. Now, sometimes those are good decision-making things. Sometimes they're bad things that could be detrimental to you and your business. So let's get right into them. Reason number one, accuracy. The numbers are still moving. Maybe your books are not in order. Maybe you receive some 1099s from customers that aren't right, or vice versa. Maybe you gave 1099s to vendors that weren't right. Or maybe you're playing with some strategic depreciation rules or things that are going to pass through on your K1 into your personal return. Remember, accuracy beats speed. Reason number two, planning opportunities. Filing an extension can ultimately open the door for strategic planning opportunities for the current year going forward. Yeah, maybe it's too late to look in the rearview mirror and we can't go back and clean up the mess in the prior year, but now we can actually have those conversations with our tax advisor, our CPA, our financial advisor, our attorney to make sure we're setting ourselves up correctly going forward. Number three, amendment avoidance. If we try and rush and file by the business deadline on March 15th, and the numbers aren't right, they're messy, we're just rushing to the finish line, we might have to go back and amend returns. And guess what? An amended return is going to cost you more money and more of a headache. So those are three reasons why extending is smart. But you know what? I'm going to give you a fourth. I'm going to give you a bonus why extending is smart. It ultimately decreases your audit risk because you have more time to go through number one, number two, number three, and you're submitting it closer to the end of the year. The government actually has less time to review those tax returns within the year. Yeah, sure, they could open up an audit period from prior years, but at the end of the day, extending is going to lower your chances of an audit risk. Now, three reasons that extending can actually hurt you. Number one, it delays the filing of your personal return. So if you have a pass-through business, an S corporation or a partnership, that K1 is going to flow onto your 1040 tax return. So if the business goes on extension, most likely we're going to have to put your personal on extension. And guess what? You can't hit pause on your personal return either. Yep, you can file to extend, but you can't extend to pay. You have to pay on April 15th. So sometimes this can get very complicated and convoluted with your cash flow. How about reason number two? Payment blind spots. People underestimate and they forget that they actually have to owe on April 15th. They can't extend that. So we have to determine what we owe and pay in that safe harbor estimate if we haven't done so already. And number three, an extension does not fix bad structure and it doesn't fix a bad mindset. It just delays the wrecking ball coming in. And that wrecking ball is the IRS and could be the state if you live in a state where you pay state income tax. So we got a pros and cons list here, but how do I ultimately decide if this is right for me? Ask yourself this question. Do I need time? Is time on my side? Or do I need clarity? Do I need to sit down with my accountant, my CPA, my tax strategist to actually understand this a little bit more? How about your numbers? Are your numbers complete or are they incomplete? If they're incomplete, well, we need to complete them as soon as possible to make sure we understand our balance sheet and our profit and loss for your accountant to file the extension and file the necessary paperwork to have tax payments paid in at the time of the extension. And the last thing to ask yourself, what does the extension cost me? No, not what you're paying your accountant to file the extension for you, but is it actually costing me extra time and money to get everything in order? Or does it actually buy me extra time for strategic planning opportunities for later in the year? Now, there's no universal one-size-fits-all answer here. We're not looking for the best decision for your situation. We're looking for the right decision for your situation. So if you're unsure if extending actually helps you or hurts you, then make sure you get strategic advice from your team at Ledgerly or your tax strategist before you click that button to extend your tax return. So book a call, hit that subscribe button, and we'll see you on the next video.